Have you ever seen a duck moving across a pond? Below the surface is where all the action is happening, but above the surface, you can just see a little bit of movement. But below that surface, the feet are paddling furiously and tons of things are going on. And that's what I think is happening in crypto today. Below the surface, massive things are happening. And a bit of that is showing up above the surface in the price action, but the foundations are being laid for a massive, massive run, yet prices are cheap. You're probably aware that the Grayscale lawsuit against the SEC, the ruling has just come down that the SEC had been capricious in their denial of spot ETFs and pretty much laid the foundation that maybe this is what the SEC, the way the SEC knew that this was going, and maybe this is why BlackRock hurried up and put in their applications, because perhaps Gary Gensler cannot continue to hold back Bitcoin spot ETFs. And so, well, their friends over at BlackRock needed to get put in position that they could be one of the first to have theirs approved, because, you know, they're close buddies, the current White House and BlackRock. And so maybe that's why it all came together. However, this is laying foundations for the crypto market to take off. Now, it's not going to take off tomorrow, but why I'm really excited is prices are still cheap while we can see the setups being made. And as an investor, this is such an amazing time in the market. This is what gets me so excited, and I'm glad you're here to join us, because we'll have Paul joining us in just a minute. I wanted to welcome you to the Crypto Rain channel and our family. If you're looking for crypto news without context, or you're looking for panic selling or FOMOing in, you can find that in a lot of other places, but you won't find that here. If you, like me, came into crypto because you realized the potential for life-changing gains over a 4 to 8 year period, and are looking for discussions on becoming a solid, unshakable crypto investor, you're in exactly the right place and with the right family, the Rainmaker family. Now, let's jump off and welcome Paul to the channel. I wanted to say none of this would be taken as financial advice. We are all big boys and girls in this space, so each of us must do our own research and make our own decisions. So if you haven't already, make it rain on that like button, strap in for the show, and let's welcome Paul from Definity. Paul?
Great to be here. Nearly the end of August, and I think it's a full moon as well, if that's your thing.
Somehow it is a thing. I can't say I know, but many years ago, so I became a nurse through the military, and while I was going back to university, I worked as a nurse. And I worked in mostly long-term care because that's where they paid the best while I was trying to go back to school. And oh my gosh, you would see those with mental illness, you would see a change in their behavior during the full moon, that they were just way more anxious, way more riled up. And I can't say I really fully understand the reasons why. I've heard some different theories, but there's a correlation. So yeah, it's crazy.
I have a good friend who's a flight attendant. She says that on full moons, the passengers act strange as well. So I don't know. There could be something in it, in the cycles, and it was how we used to measure time. But we've had a very interesting August in the sense that it's been low volume, big move, big stories, and it seems to be coming to the end. I mean, we've seen that the overarching theme has still been, despite Michael Burry and his call about the market collapsing and all the fear that's happened about that, the markets have bounced back up. Now, it might not be the end of the volatility, but it certainly didn't look, from a technical point of view, as to be the similar situation as in 2007 into 8, when we had a completely over-levered and over-the-top sort of arcane type risk situation with all the products that were being created and sold and all that sort of stuff going on. I mean, you might argue that there's excessive speculation, but that's always around. So for me, that doesn't change a whole lot. But yeah, so it's been an interesting August, and just thinking back to people being extremely bearish and fearful. I'm wondering when those positions are going to be cut and they're going to start buying, and we'll see the markets projected into new highs.
Well, if Michael Burry didn't cover his shorts, he is down like 50 to 52%. And so,
yeah, I had a closer look at what that was about, and look, I must admit, it's still unclear as to what his position really was, and I must admit, since last week, I haven't looked into it any further, other than it just sort of sits there in the background that was something that would have encouraged a lot of people potentially to go short. And I'm not also discounting someone of his intelligence and magnitude of research that he does and what he did in the past, but we did talk about it last week. He was wrong for a long time before he went right. That can be risky. Because you could be long for a long time and then be completely wrong, and that can blow up your fund. So, has he got the timing right now? In 2007, I would have said 100%. And that's not with hindsight. That was because there was a lot of things that had actually burst at that time, and there were some major signals that was a top. But at this point in time, it's either early or wrong, and that's the only way I can look at it, really.
With leverage being early, so you might be right on your longer strategy, but if you're early and you're using leverage, you might as well be wrong, because it will crush you. And so he's a smart guy, and I really value the way he thinks. And I'm guessing that he's right, but that is the problem with leverage, is being wrong so long before you're right can burn you to the ground and burn your fund to the ground. And so that's why I like buying things spot, right? Because then I can just hold. When I'm doing leverage, it's like, well, sometimes you might even be right and completely right. But if you're wrong for long enough, it'll burn everything you have to the ground before you're then right. And so ultimately, it won't matter that you were right. You lost all the money you put into it.
Yeah, I mean, it's leverage cuts both ways. It's definitely a double-edged sword, and you have to get it right if you're using leverage. You have to get it right, and timing is critical. It's less critical if you're not using leverage. But as I say, the problem here, it's not to pick on whether he was short or what he was doing or anything else, because we all get things wrong, and that's to be expected in the markets, and it's not a criticism. For me, what's more interesting is what it sets up in terms of psychology and its response in the market. If he put that call out and everyone had said, oh no, he's crazy, he's lost it, he's got to be wrong this time, then that would have told me something about the structure and the sentiment of the market. In other words, he was more likely to be right. But he put that call out, and there was a lot of people agreeing with it and ready for the market to collapse and looking for it to collapse, and making the narrative more about a potential collapse, which isn't borne out from what I can see. So that's how I see it as being interesting. So it's also very interesting. We've had such a sharp rebound. I mean, we looked at the charts last week. We're going to do it again this week, but you can see this retracement, which garnered so much attention, just looks like a normal corrective pullback in a bull market rather than the start of some major bear market. And it felt a little bit uncomfortable in the short term, but it always does when the market pulls back.
True. Chris Ashby says, what's up, Jay and Paul?
Hey.
Give us a shout out in the comments if you're here watching the stream. Let us know what's on your mind. Paul, why don't I add your chart in and share with us some of what you're looking at?
Sure. So as always, and if you're new to the channel and wondering why we're looking at equities when it's a crypto channel, the reason is because we look at things from a macro point of view and piece together what the broader markets are doing to see how that might affect the assets that we're interested in. I'm personally interested in all assets, but crypto assets is obviously where most of the volatility is, and potentially in the altcoins being even more. So when we get a story about the market feeling very bearish and saying that it's going to collapse, and is this another 2008 crisis, we look at the chart, we can see that The trend is still up. We hit a panic low last October. The market's been up ever since, and it's been edging towards this prior high, which we're consistently calling a break of into next year, and it's just working its way up. So it had quite a decent move up and a correction on the way back down. That's nothing more than a test of support. I think we even talked about the support in this zone with the Dow Jones. So the Dow Jones Industrial Average, 30 stocks, not as broad based, and so you could discount it and just say it's 30 big stocks. So let's look at something else. Well, let's look at the S&P. The S&P looks just as bullish, if not more bullish. This is a broader range of stocks, and yes, again, there are some major heavyweights in there that are doing all the heavy lifting, but it's still the market that we have to analyze. It's still the biggest and the best of the stocks in the US, and it's still telling us something, that it's going up rather than this trend being to the downside, which would, if it were, I would be bearish, but it's not. It's up. So we're heading towards this prior high, 48.18, and it's just on its way. So wall of worry, certainly. Straight line move, you never get a straight line move. It's actually quite bad to get a straight line move, because it means the market will be unsustainable, or it can be unsustainable because it draws in too many buyers, which eventually causes a crash. So the fact that the market's moved up smoothly, come back, retrace, is now going to consolidate and move up again. Look, it may even move lower. I don't know for sure in the short term what it's going to do, but the bigger picture structure is still bullish, and I haven't changed our view since it was forming the base down here that the market was going to go into a new high. Russell 2000, that's interesting because it's small cap stocks, definitely underperforming, definitely a fly in the ointment. I have to say, it's not great that small cap stocks aren't doing particularly well, but they're not going downwards either. So they're kind of neutral for me. And I've drawn this line here, 1, 2, 3 points of resistance that comes in just below the 2000 level. If that breaks, we're going to see a very nice trend to the upside. That might be a secondary move when the S&P moves into a new high, and then the market starts looking around for, inverted commas, value or cheaper stocks that haven't moved yet. So that's a story perhaps for a bit later in the year, maybe even early next year, but it's not performing badly, which is what I'm interested in. And the Nasdaq, again, this is possibly leading the way. I mean, it's still a correction. Market's come down. It's had a very decent rally in the short term. Let's just zoom in and have a look here. So this is the correction, very decent rebound. Now, you could argue that this is going to form into some form of top. Fair enough, you could say that, but it hasn't actually done it yet. It's just formed a really good support point, and the trend is still up. That trend rate was quite aggressive and fast, so the fact that it's pulled back a little bit is absolutely fine. It's been running pretty much since 812, this sort of area here. So the fact that it gets to 15 and then comes off it's like, well, it needs a breather at some point. So none of what I've seen so far is out of the ordinary. And that's the thing about charts. When you walk away and come back and have a look at them without the noise of the markets, it sort of clarifies what's happening. The trend is up. Now, of great importance, as we've discussed many times, has been the chart of the dollar index. And the dollar index was a bit naughty in the sense that it broke this trend line. I mean, of course, the markets can do what they want to do, but it went through this trend line and the 200-day moving average. As Einstein said, perfection is for tailors, and this is, or elegance is for tailors. And sometimes you want it to look elegant and nice, and the markets don't do that. So if it stopped at this downward trend line, which was near the 200-day moving average, it would have been a very nice place for it to do that. But of course, it broke through, popped through a bit more, and squeezed the final shorts out, and now it's returning and coming back to the direction that it should, in my view, be moving into. So the dollar index is turning down. It was quite a sharp move. We've got non-farm payrolls on Friday. I wonder if somebody's picked up on something like a weaker number that will mean interest rates aren't going up. That's what I suspect. So I'd be looking for a weaker number of non-farms on Friday, and initial reaction discounted, but direction for the dollar will be, or continue to be, to the downside. all of this is pointing to a pickup in volume as we move into September, and continuation of the risk-on trades that we've seen, throughout the year. And sentiment continues to be bearish, which is perfect.
It's amazing how strong the dollar did get that run up. I didn't expect it to be so savage, right? So I'm glad to see it's topped off for now, because the crypto market usually runs inverse to the strength of the dollar. In fact, a lot of assets tend to. And so as the DXY is going up, that's usually a bad indicator for crypto. Now, it's gone up massively, and crypto had gone down some during that time. So I'm looking forward to see what happens as the dollar corrects downwards, where the crypto space goes. We were talking in the Discord with some of the members recently, and some members sharing some thoughts about where this is going, and they might be right. And this is kind of what I've had in my mind as well, that I think there's a really big run coming, but that doesn't mean in the short term there isn't further shakeouts or some kind of bad news. Now, we did get the lawsuit against the SEC by Grayscale, saying that the SEC was unfairly denying their application for a spot ETF, and the judge agreed with them and said the SEC was capricious in their decision, which is kind of like intellectual speak for, like, I mean, that's a way you're saying they're being intellectually dishonest. And so, yeah, that was a really strong ruling, but that doesn't necessarily mean a spot ETF tomorrow, though that's another foundational block towards this bigger crypto run that's again in place, and yet prices are still so cheap, which is what's exciting to me.
Yeah, I think that these rulings and things in the short term are just ways of the market sorting out this new technology, and it will eventually sort its way out. I think the important thing is where the money is in the long term, and whether there's a continuation of inflation, and that doesn't look like it's going to go away anytime soon. If there isn't any dip in the economy, which we may be about to see, perhaps this is there were some numbers that people saw that made them short the market. Markets don't work like that. If the market sees weaker numbers, the first thing they'll do is look to what the Fed will do, and the Fed will reduce interest rates. So the profile will be weaker for interest rates, which is great for everybody. So inflation is going to continue to run hot, and interest rates can, if they stabilize, which they seem to have done, and maybe even topped out, which is the main call that we have towards the end of the year, maybe into the beginning of next year. That's going to drive capital into various other areas, not least the stock market, which is already ahead of the game, but definitely into crypto assets. So it should be remembered that even if there isn't anything underpinning the market, if there's enough money sloshing around, people just look for opportunities, and a rising market sparks more money that flows in. It's kind of this thing that George Soros talks about, reflexivity. It's really just a rising market means people make money, so they put more money into it. It's a virtuous circle, if you like, which is a very simple explanation for what it is. And you get a vicious circle in the opposite direction when things start to go down. So even if the underlying fundamentals don't support it, you can, just through capital flows and the fact that the market is hunting for inflationary hedges, is hunting for anything that can make them or anything that they can do with spare capital, those are the things that will attract or support and continue to support the crypto assets, which indeed, we shouldn't be forgotten that we are not that far away from a halving. I mean, time flies, it will fly. And also we've got, as we've mentioned before, it's worth repeating, we've got an election year coming up. So there's going to be a lot of positive things pushing this market up. So so let's see what happens. As you rightly say, we're not completely out of the August sort of blues, which can cause these downdrafts in the market because you get the number twos on the desk who are trading, and the head of trading's on a beach somewhere, and there tends to be panic. And I know that might sound like a simplification, but it really does happen. But so normal volumes will start to come back as the world gets back from their holidays and stuff, and we will see truly where the money is in terms of, will there be a lot of short covering to cover these positions, or could there be a bit more of a shakeout? I mean, September, October is a nervous time, or can be a nervous time, because most of the big crashes happened around October, September, October. There were big moves, so the market gets a little nervous. But broadly speaking, there's plenty of sort of risk on trades that are doing well for me to not to be worried at this point.
I'm sure you've been watching what's going on in China. Do you think that they solve this problem by trying to print their way out of it, or inflating their currency?
Well, the currency's weakened already quite a lot against the US dollar, and I think that's going to help, full stop. I think that the effect of that is the equivalent to an interest rate cut. So as the US economy and as the global economies have come out of this COVID situation and started to spend more, they're naturally going to be pulled up whatever they do. So I don't think there's that much of a problem. They've got plenty of scope to print money. They've got plenty of scope to influence the economy with lowering interest rates. So I would say they have more scope than the US has, potentially, to support their economy. So, and they will, one way or the other, it will just go up. So, well, I think it will. I mean, I could be wrong, of course, could be wrong about anything, but I don't see there's this sort of imbalance in the world where everything seems to be going up. And, that's Europe as well. So Europe's doing well, US is doing well, certain parts of Asia are doing well, and then China and Hong Kong are not doing well. It's unlikely in this globalized sort of world. Yes, after COVID, people were saying we are going to try and make it so that things are bought and paid for and created on at home, because we don't want to have this problem of supply chain problems again. But the reality of that is it's very expensive to do that. So I think they will be tempted back to, oh, well, maybe it's the same sort of mentality after 9/11, when nobody thought they would fly again, and then actually realized that you've seen the big event, and there is always fear that that big event would happen again, but actually it's very unlikely, or less likely now.
Even less likely, than before.
Yeah. So, I know you can't predict pandemics at all, whether governments are going to engineer certain situations to their advantage, but
good way to say that. I love it.
Yeah. But I think there are enough people who are a bit wary of it, so it would be a bad time to do it again so quickly. So I think, in summary, it should be allowed to recover with everything else.
Perfect. Any other macro things you're looking at before we jump into some crypto?
Well, I was actually just looking very quickly at as I do, the interest rate profile. And so this is 6 months money, which is trading around 5.3% in the US. And that stopped going up, which is useful, right? You don't want interest rates to be going higher. We want this sideways move, and it's been moving sideways for at least 3 months, which is great. 2-year yields keep backing off this key level. I don't know whether it will try to go up on the basis of inflation, because 2-year, 10-year money are much more long-term. Well, they are obviously by their very nature influenced by the inflation rate, and they are currently lower than short-term rates, which is why people are thinking that there could be a recession, because you have this what's called an inversion of rates. Short-term rates are higher than long-term rates. Well, if you lock your money up for 10 years, you'd expect to get more money in return for locking your money up than locking up for a short-term amount of time. So this has been used as a reason as to why potentially there could be a recession coming. But it really does depend where you are in the cycle. We're in the wrong point of the cycle for there to be a recession. And the asset markets that are most sensitive to a recession are not showing that there will be one. So for the moment, I'm just sort of keen to see which way this is going to break out. And as long as 6-month money stays around 5.3 and starts to come down, potentially comes down, this will be the first indicator. So it's not gone up anymore for me, which is fine, which is a bit like the Russell 2000 not going down. It's more what it doesn't do as opposed to what it does do. But I'm just keeping a watching brief on that. And some of the other commodity currencies like the Australian dollar, New Zealand dollar, Canadian dollar, because those tend to lead demand in the region. So when people demand commodities, that means we have, copper's used for electric cars, it's used in housing and all those places, and that tends to move copper, and it tends to move the commodities as well. So those are all sort of holding in okay. And if there's something more significant that happens that we should know about, obviously I'll bring it to your attention. But those are the peripheral things that are still supporting, in my view, the bigger picture.
Yeah, nice. Why don't we jump over to Bitcoin, take a look at ETH, and then we've got some altcoins we're going to dive into.
Absolutely. Okay. So 25,212, that level that we seem to come back to. I mean, it got very, very close to it, didn't it, on this pullback? And that's where the bounce happened. So, that was nice that was kind of respected there. Where are we? We're still in a correction. I think back to when the market was doing this, and we were talking about how you have to be here every week watching the markets, because there's times when it's in a downward trend, and when it switches into an upward trend, it's very easy to sort of abandon the market. Now, why there's quite so much bearishness around sort of Bitcoin and other cryptocurrencies, I don't really get it at this point, because the markets are going up, and yes, in the short term, there's been this consolidation, but we are still way above the lows from last year. So it's a bit like with the Dow. October was the low last year. The trend is still up. That is much better than the situation we were in last year. So using these pullbacks as potential buying points still seems to be the strategy that the market wants to follow, and I tend to agree with that. So yes, the market's consolidating, but it's held on good support here, 25,212. Now, between now and next week, if that should go, the next point that I would look for as a buy area would be this 22,957, which is a 25% retracement. That's been on there every week. Now, I'm not saying it's going to get there or has to get there. I've just put it there as a potential support point. I like to see how the market reacts when it gets close to these support points. And this was a very nice reaction. So if the trend is over, if the correction, I should say, is over, that's for me would be a great place for it to happen, because equities are starting to move back up, or have moved up very quickly since the pullback, and this should follow it. So Bitcoin for me is looking good. ETH, similar situation. We did have that break, that trend line break, which was caused quite a sharp reaction. But then what you'd expect from that is a low to be printed, and then a sharp reaction in the opposite direction, which is what it's done. Still not out of the woods, of course. We're still forming this base, so it could well keep going sideways for now. The big trigger, the breakout point, is a break of this resistance line here, which is the top of a triangular constriction. That comes in around 1980. So, 1980, 1970, by the time it gets up there, because that's falling in price. But I look in broad strokes here, and the big picture for me is still a basing pattern until we see otherwise. So I'm glad to see that it has found support, and that support came in relatively close to this major trend line, because if it broke this one, it would be a bit more uncomfortable, to be honest. It really would, because we'd have to be forming a new line and we'd have to wait for it to find support there. But whilst it's above this line here, it's still within the structure of the major support points that it's formed since last year. So that fits in much more nicely with this bullish bias that we have. And that this is just a consolidation phase before we move into the next gear of this bull market. So steady as she goes is all I can say for the moment.
Yeah, it seems like the right things are setting up, though. Even just looking at that chart, realize that things can break down. Maybe some massive bad news comes out. This often happens, and sometimes it's even, I think, planned by really big money. Why? Because they like to buy cheap. They also really, really big money. The crypto markets are still very small compared to many other markets, and so they can be pushed around by the whales. And you can make money by pushing around the market, especially as everyone starts to get really bullish. Well, then there's usually a lot of longs, and they can take the opposite side of those positions. They often have the power to have some articles come out that usually recycle some kind of old FUD, but with a new spin on it. And then they sell a bunch of Bitcoin or they sell a bunch of ETH while they've taken or after they've taken a bunch of shorts, pushes the market down, and they make a lot of money. And then they're able to buy all that Bitcoin back for cheaper while they made money on their shorts. And so this happens. Just know that trading on leverage is massively risky. And so don't get dispirited if in the next 6 months or 9 months, a major correction down happens. And maybe it won't, but often it does. And that doesn't mean this isn't a really big basing pattern where we're probably going to have a really big liftoff soon. And that's what I'm waiting for. And I don't get shaken out by these temporary swings that sometimes can last a month or 2 or 3. I mean, last cycle, we had this massive swing to the downside because all the businesses were shut down because of some kind of virus, and nobody had thought of that coming and shutting down major economies and their businesses, and didn't know what could be the impacts or effects of that. So it's a scary time, and all asset classes got sold off massively initially, and then later they did really well. So yeah, let's jump over to our first altcoin that we wanted to look at. Well, before I do, I wanted to share some thoughts. Now, I shared these the other day around the Ecomiverse on Monday, where I was joined by Jordan Reese. I think Randy was there. Dr. Stuff was definitely there. And this thought was spawned by Max, who shared in our private Discord a recent TED Talk by Yatsu. And I'm a big fan of Yatsu. He's one of the biggest investors. So he heads Animoca Brands, which is one of the biggest investors in blockchain gaming and other digital collectible spaces. And what he said is, where he lives in Asia, the average person spends 9 hours a day online. So think about that. 9 hours a day. That is the majority of their waking hours. So in other words, in some countries, they're already in a metaverse, but this is a metaverse 1.0 owned by the social media giants, the search engine giants. And the truth is, you own nothing unless you own a little bit of stock in those companies. But every time you participate, you make their network larger, and you get nothing for it, except you get your data harvested. You get your search history sold off without your permission, and your purchase history sold. And you get sometimes free email for it, as long as you don't use over a gigabyte of storage in there. And then you have to pay for that too. So the metaverse giants of Metaverse 1.0 are the largest companies in the world. But blockchain is bringing about Metaverse 2.0. And some of these companies that we're talking about, and it's hard to tell which ones, are going to become some of the largest companies in the world. Some of the game ideas that come out, so Animoca Brands invests a lot in gaming companies. Some of these blockchain games are going to dominate the gaming space because of the value transfer that's able to happen in them versus existing gaming. And so things are going away that is amazing. And this major shift in technology is going to transfer major amounts of wealth. into these new ideas and these new ecosystems and some value created by these ecosystems. And so I'm excited where this is going. So these first two picks I actually put on there. And the first one I want to look at was Myria. Myria is a competitor to Gala. And I would love to see Gala do well. I'm concerned about some decisions they've made the last 9 months to a year. And so I don't have any more Gala. I sold it. Myria has a much lower market cap versus Gala too. And I think I like their leadership a lot, and I think they have a bright future. So I am huge in, understand that I have a lot of Myria nodes myself. So therefore I also have a lot of Myria tokens. So I'm heavy on this. So maybe I'm even biased, but there are reasons why I went so heavy on Myria, and I believe in its future.
So from a technical point of view, there's not a lot of data here. I don't know if there was some history before this, but there's not much for me to go on other than a downward trend that is now in a consolidation. So since this breakout, we have got some signs that it is being bought up. So there are people like yourself that are saying this is good and they're putting money into it. But it's not enough to turn the ship around completely. So for me, I need a bit more evidence that this has turned, mainly because we are so close to the prior or the major low of the chart, which is, it's just here. There's not much of a cushion for a position if I take one. Now, you could argue you're near a low, so you're getting it cheap. But I can't value it that way because I'm not looking at the fundamentals, and I'm not going to either. So I have to wait for this to base out using my discipline. And what I would say is a very good level here would be 0019, which is where it stopped twice. And if it does break above there, I don't mind paying a bit more for it because the potential for it to be in a base increases. And also, I mean, as it's potentially running towards that, one could nibble at it. But it's definitely in the highly risky category from my point of view for two reasons. One, it's because there's not much data, and two, because it hasn't formed a base as yet. But that aside, if it does get through this 0.0019 area, that would make the chart look completely different. And especially if it's done that at a time either ahead of any of the majors or some of the altcoins, or even if it's lagging, we get some sort of form of correlation as to whether it wants to move with the broader market or not. If everything else moves up and it's still sort of stuck in the doldrums down here, that would be another red flag for me. So I need to wait and see for this. Is my final kind of call on it. I wouldn't be moving on it myself right now, but I can completely understand that others will have a different view. So it's a wait for me.
Yes, and
you could probably have predicted that.
Yeah. So it's at a risky stage, and I love this early stage of when projects launch, right? And I can't tell if it's going to continue to get lower. It is really low compared for the way I'm thinking about it, but it could definitely get lower. Let me share what I'm looking at today, or really about this. So whenever a project launches, there's some kind of token investing. Now, Myria has done this the way that Gala has done it, where they didn't sell tokens so much as they sold nodes. And when you run those nodes, it's what supports the network that the Myria ecosystem runs on. And for running those nodes every day, you get a certain number of tokens. And so that's how these tokens are vesting into the ecosystem. Well, what happens is supply comes into circulation. So right now, let's see, there are 4 billion tokens in circulation with a total supply or max supply of 50 billion. So tokens are vesting every single day. and that pushes downward price pressure on it, bringing the market cap to a $5 million market cap, or in a case where such a small percentage of the tokens are in circulation, it's really a good idea to keep your eye on the fully diluted market cap, so if all the tokens were in circulation and the price was where it's at today, the market cap would be $68 million, which I feel is low for a project of Myria's caliber. Now, that doesn't mean it can't get lower, and it might, but it might also be forming the bottom. And when I say that is, if this stays at a higher low than here, it might mean there's the double bottom and that the base is formed, and that the market felt like, even with the ongoing token investing, the price is just so cheap that buyers can't pass it up anymore, and they continue to load up on it, and then the price starts to go the other way. And as the price starts to go the other way, even node operators who are getting their tokens every month are going to be more likely to hold it, because they're like, well, the trend is going up, and so then the price further goes up. Now, has that happened? I don't know. People that are familiar with Myria usually understand why I'm so excited about its future. We'll see if it comes together. I went very large on this bet. I picked up 21 nodes, and so I get about 1.2 million tokens per month, and I'm excited about where this is going. Now, why did I buy nodes versus the tokens? Well, the Gala nodes in the early days, if you had picked up a Gala node, they were about $5,000. And at one point, they were giving you token rewards of about $10,000 a month during the bull market when Gala tokens were at their high point. So very good ROI. In fact, the price of the nodes over time went up to like 300 and something thousand, I believe, maybe high 280s. I thought it was low 300,000 range instead of the 5,000 you could have gotten in the early days. So Myria, I think, is one of the ones with the best chance for a very strong gaming ecosystem. Now, I think there's going to be a lot of winners, especially in this next run. In the future, there's going to be a few really, really, really big names, but this is Myria's website. They have a lot. This is the background of some of the people who work with them, and it takes a minute for some of their future games to come up. So some of them they're building themselves. They tend to put the Myria ones that they're building themselves right up top, but there's actually a 360 cricket game that's backed by one of the top cricket players. Now, I don't follow cricket at all, but a lot of the world does. I mean, in the UK, it's a really big deal. India, which has a massive, massive population, cricket is a big deal. I don't know any history on cricket games, but that might be a potentially large audience there. Let's see. So this is some of their other stuff. So they have a lot of other third-party developers building on top of it, which is important for their ecosystem to really do well over time. So you can just see game after game after game being developed. And my guess is 90% of these games don't amount to much. But even if 3 of them do, that can take Myria to massive, massive heights. Cool. So I like it at this price. The reason I wanted it brought up or talked about today is because I identify what for me are green zones. And I like that it's possibly at the lower of this trend line. Now, it could go up from here. It could come down cheaper, and maybe it gets even cheaper. I like this fully diluted market cap price. Maybe it gets cheaper. If it does, I'd consider that a gift. But when I'm accumulating and dollar cost averaging, I just have to identify where my buy zones are and then just dollar cost average into them. And I especially like that it's dropped back down from the 0.19 cents price down to the 0.14 cents. And so, yeah, I wanted to talk about Myria today and one other blockchain game, Sidus. So for me, it's a buy because it's in my buy zone.
Can I ask you a question on the circulating supply? With it being at 8%, and obviously there's much more to come from that, does that not temper your bullish view slightly, or you obviously you're comfortable with that, but why is that?
Part of the reason it's so cheap right now is that people are worried, so they're pricing that in, right? So yes, that's definitely a concern, because that means tokens are going to continue to vest, and that puts a downward price pressure on the token. And probably because of that downward price pressure brought in our lows that we hit. Now, maybe it goes even lower. What will happen though is Myria has one of the best potentials, in my opinion, for an amazing future in this industry that I think is going to be gigantic, that people do not realize the billions and billions and billions of dollars, like the tens of billions and even hundreds of billions and probably trillions that will come into blockchain gaming. And so Myria is positioning themselves as one of the top companies going after that with the best potential. The founder of it, Jonathan Teo, comes from a billionaire entrepreneur family, and he's a very experienced investor and leader. And he's put together a team with the right background to make this all happen. And they're obviously getting a lot of game developers building on top of them. So it, in my opinion, never should have hit that fully diluted market cap that it's at. But that doesn't mean it doesn't hit even lower, because the pendulum often swings too far to the downside before it swings too far to the upside. And that's why there's so much money making crypto, is because like right now, almost nobody is talking about blockchain gaming. So why would I be so interested in it? Well, I love that period of time because there is unequal information, because most of the world doesn't realize this shift to asset-owned gaming items that we're going to have. They don't realize it's going that way, but it is going that way. And we're already seeing that with Counter-Strike Go. Counter-Strike is one of the bigger games in the world, but they experimented with this idea of asset ownership. Now, it's not even blockchain or NFT related, but they've been selling these loot crates. In these loot crates, you can get skin items for use in the game. Do you know, over the past 2 years, that people selling to other people the items that they got from those loot crates, there has been $30 billion transacted in those items. 30 billion. Now they take there's a total of a 15% market fee when you transact. So if I sold XYZ skin item to you, Paul, for 100 quid, they would keep 15% of it between them and Steam. And so I would get 85 and you would get the item and you paid me 100 quid for it. So they have made $4.5 billion in those market transaction fees off of just this idea of, hey, if you buy this game item, you own it and you can sell it to someone else. Now, that's what blockchain gaming is bringing to the world. Now, within their ecosystem, if you get your account shut down, it doesn't matter if you had $2 million worth of items in that account. You now don't have access to them. You can't transact them. It's not even a fully open ecosystem, because I don't think you can extract that money from Steam. So you can buy stuff from other games within Steam. I don't even think you can withdraw that. And so it's kind of like a step that proved where things are going. I already knew that they were going to go this way. That was just, they experimented with it and they're like, holy smokes. And everybody in the gaming industry is taking note of that. But blockchain gaming further empowers that, because you can withdraw the money. You truly can own, in some gaming ecosystems, the asset and transfer that asset. Then maybe your login gets disabled to a game if you're, say, hacking or doing something else. But they can set up in a way that you might still be able to sell your assets. And so that is going towards game item ownership. And that idea will change gaming completely. And because of that, it also gives third-party incentives to participate within your ecosystem. So the future of gaming is that you create this game or this metaverse that people want to play in, that other companies can come build stuff within your ecosystem and create value and sell it to players. And the game maker will get money for it, kind of like what the Apple Store has done, kind of like what Steam has done. So on CSGO items, when they're sold, my understanding is 10% goes to Counter-Strike and 5% goes to Steam. So Steam didn't create it. They created the ecosystem that this happens in. And so they get 5%. So they got out of that 4.5 billion, they got 1.5 billion, which is incredible. And so this is where everything is going. And some of these blockchain gaming companies are going to make a mint, and some that are creating ecosystems are going to make massive money too. And some of the people within those ecosystems are going to make massive amounts of money. So I'm just positioning myself where things were going to go. And I had this thesis since 2018. In 2019, I bought Axie Infinity land. And during the bear market, I bought it really cheap, and it got even cheaper. It went down by at least 2/3 in price. I put about $4,100 into land. When it opened up, you could buy land, and they would give you these crates that came with a land item and then a bunch of other items. And for the next year and a half to 2 years, it went down in price, and then it went up, and I sold at about 100x. And had I held it just 6 months more, Paul, it went to 3,000x from where I bought it at. Now, I didn't even get it at the lows. It went down like massively from where I bought it at. So from the bottom, it went up tremendously. But even from where I was at, had I held 6 months more, that 4,100 would have been $12 million. Now, the pendulum swung too far to the upside too, right? So, and it's corrected downward. It's corrected down by 90%, but still, if I held all those game items, they would still be worth like 1.2 million today, which is still a really good number, right? So yeah, that's why I wanted to include Myria in there. And the next one too, I think, is one of the leading blockchain gaming companies, perhaps ecosystems too, because they're going to build an ecosystem within their game. And that's exciting to me.
Sure. Yeah. So that's Sidus or Sidus. I don't know how you'd pronounce that.
Yeah, the game maker. So he's out of Germany, and he says it's Sidus, right? But I always want to say Sidus. But having met him in person, I always said Sidus prior to meeting him. And then, like, yeah, depending on, like, if I was thinking of the conversation, I would say Sidus. If not, I'd say Sidus. But Sidus is how he pronounces it.
Right. So more circulating supply we can see, but obviously that's one of the fundamental things that you'd be looking for. For me, in terms of the price, let me just check on the right. So we haven't got all the data as yet, have we? Because that's 21 of the 8. So there's some missing data here. So I'm not sure whether, well, obviously we're not getting an up-to-date price. Let's just have a look. No. What do you think? We should have a look at CoinGecko. Would there be any point in doing that?
Yeah.
Actually, hang on. Oh no, this is
yeah, for some reason the charts are massively delayed, right? And it's kind of lag time before they get the data. So I usually look at it at CoinMarketCap or CoinGecko, just because I do look at the bigger charts, but I hate that there's not really up-to-date information on it. I want to give a shout out. By the way, Shahid says, hello, everyone. A little bit ago, Arjun asked if we covered Omi yet. Omi's actually going to be next. Nick Scott says, good morning, gentlemen.
Morning, Nick.
Suresh asks, hey, Jay, thoughts on Dimitra? So, yeah, we'll take a look at that after we get through our scheduled picks. We should have time.
Sure. So on Sidus, which is, so we have got an up-to-date chart here now. The similar situation, really. This is bumping along the lows. There is a succession of lower highs coming here, which is not a great sign. It's pressing against support. My concern from a technical point of view is, if this low breaks, will it encourage a kind of bout of FUD, which would push the market down quite aggressively? You could argue whether that's a buying opportunity if you're seeing something that Jay's talking about here. But for me, I'd have to wait for strength to come in. I want an upward trend, and there was potential for that. We got a big downward trend here, and then this looked like it was basing. We had a left shoulder, head, right shoulder, but it didn't complete. That would have been complete around this 0.03 cents level. And since then, it's been in a fairly clear downward trend, coming right back to this breakout point, this first breakout point. Now, you could argue that this is what sparked this first rally here. Potentially getting near it will spark the rally again. So people could react to it here, but there's not much, again, for me to have a cushion between where we are now and it breaking that support and causing a big move to the downside. So from a technical point of view, I would have to wait. In a very sort of high risk on market, if everything was burning higher and in terms of crypto and making new highs, I might be tempted to buy it here with a very tight stop. But it would have to be for reasons of taking profits elsewhere and then kind of putting some into this rather than just what it looks like right now. So it would be in anticipation of others coming in. From a technical point of view, I would rarely do that. But if the macro environment supported it, there may be a reason to do that. But at the moment, we're not quite at that point yet. Even though it is a good macro environment, in my view, it's not good enough to be highly speculative. So then the next question is, well, if I'm not buying it here, where am I going to buy it? At the very least, I'd expect this trend line to break, and it's been a very good trend line. So by the same token, it's not much to break the downside. There would also not much. It wouldn't have to do that much for it to start to look much better. And that comes in around this 0.013 area. We break that. It had a few attempts got slapped back down again. Any move through that area for me technically would be interesting. It's an area that's been traded around before. So that would be the first sort of chink of light to say that it could be going back up. So for the moment, it's a wait, but it's interesting to hear about I totally agree about the potential in the sector and it being unloved because people don't understand it. So it's a compelling argument there. Whether this is the one that's going to lead the way, we shall see. But a trend to $1 billion market will give us a lot of opportunity from a technical point of view also to jump in. So it's a wait for me, but it's a really good one to look at.
Yeah, this one I watched since pre-launch, before they launched, and I was like, oh, this potentially could be a big one. And then I had the opportunity to meet up with Dan at NFT NYC. Dan Combe, I think is how you say his last name. Fantastic guy, young, vibrant, driven. He's got a good team behind him, but I've only met him. And I was like, I like this guy. He's got leadership capabilities. He's got drive. He's got passion for the gaming industry. He's got this bigger vision. And what we really are when we're investing in crypto is we're investing in early stage technology companies. And so some people think it's some kind of gambling space. And some of the stuff it is, like meme coins are really just like gambling to me. I like to take strategic bets in where I think the industry will blossom. And I like to bet on good teams. So I don't see it as gambling, because gambling on average when you're gambling is you'll lose more than you make. There are some professional gamblers that have figured out ways to rig the odds for them rather than against them. So they maybe count cards while playing 21, or they're just so good at reading body language and the odds in poker that they win way more than they lose. And that percentage is extremely small. Most people lose money in gambling. And the truth is, a lot of people lose money in crypto because they treat it like gambling. The reason I made massive amounts in crypto is I identify good possibilities where I feel like the odds are massively stacked in my favor. And I buy those things when I feel that they're cheap. And so Sidus, now specifically, they have two tokens, Sidus and the Senate token. And their token is doing the same thing. Now, I used the Sidus token and brought that up because it's got the same name as the game. But specifically, I bought their Senate token recently and added, but you see it's doing exactly the same thing, right? So what I like is it's come down almost 75% from the recent high in February. It's right back down to these previous lows, and it could go cheaper. And I just realized that it is. I'm just making a long-term play, and I'm dollar cost averaging in. And would I like to own a lot more of this? I would love to own a whole lot more of this. And so hopefully it does get even cheaper. But I recently added to my position in this, and there's reasons why I think that the odds are stacked in my favor, and I'm willing to be patient and let it play out. Now, from where I bought Axie Infinity, it wasn't really exciting the next 18 months when every time I checked prices, things were cheaper than what I had bought it at. But I was right in the long term, and it not only did well, it did extremely well. Will this one? I don't know. I'm just, for myself, willing to take that bet. I'm sharing with you the research in a very limited form because we can only spend so much time on each one. Why I like it, and you have to make your own decision. Don't just buy something because I like it, because then you're not learning how to be an investor yourself. And the whole goal of this isn't to go like tell people what to buy. Number one, that'd be financial advice that would not be legal. Secondly, it doesn't teach you to how to become savvy and smart and really good, because I'm probably only going to cover crypto through 2025. And what good is it for any of us if people are just following what I buy without making their own informed decision? What are you learning? Because what if you came here, you tuned in for the next 2 years, and you became an extremely savvy investor? And that's why I love having Paul on. Paul and I don't often our buy, what we think about things don't always coincide. In fact, don't often coincide. But Paul has been in this industry. He takes a very different approach. He has very good reasons with his methodology and a very strong methodology, and I feel like it creates a more informed audience, because that's what drives me with this channel, is an informed audience who become sophisticated investors that learn how to take odds that are in their favor so that they can make massive amounts in this technology shift that's happening, and they can participate in it. And the goal that really drives me is having the richest audience in the world per capita, right? That on average, the people that tune in this channel make more than everywhere else. And that would really be a huge win, in my opinion, because we created the most informed audience in the world. All right, let's jump on to the next ones. OMI, another one I'm super passionate about. But let's take a look at what you have on the charts and talk about where OMI's at. It's definitely had some interesting things going on.
Yeah, absolutely. So this was a classic example how you could look at different approaches on playing the market, because this is one that you were dollar cost averaging, convinced it was going to go higher. For me, I needed more evidence, but as the market was going down, obviously I wouldn't be buying into that. But then as it went sideways, that was the first step, and we discussed how that was the first step to a change in trend. And then as it broke this resistance point, the first sort of buy point for me was this 0.006694. Now, of course, you're seeing that with hindsight, but you can go back and have a look. We're talking about it with hindsight, but we did discuss it in that way. And this is where we use technicals to see how the market sentiment is changing. And it's, for me, why I don't want to buy lows, why I want to buy something when the market is moving. So it's like the train is moving, let's jump on it. And when it's not, we stand aside. But the move up being very aggressive, as I was saying last week, we had this triangular constriction, which should push up again. So it's interesting to see that it did that. Also, in normal sort of traditional technical analysis like RSI, people would be saying, oh, this is a time to sell because it's overbought. But the situation that it's in, the fact that it's come out of a base and is moving into a new trend, for me, that's not where you sell things. That's where you buy things, or that's where you run with the trend. So these indicators can wrong foot people because they're just reading the raw signals without looking at the context of what the technicals are. So you have to put those two things together. Now, very slowly, we're getting a crossover. So there's a medium-term moving average here that's turning up. The long-term moving average, the purple line, is still downwards, but that's probably going to cross very soon, and that might encourage some more buying because there are algo traders out there that use simple crossovers, or whether they're using it on this one, I don't know, but in the majors they tend to do that. But structurally now we can take a step back and say, well, look what is going on here. This is now potentially the left shoulder. This was the head base, and now we could be forming the right shoulder. So in practical terms, what that could mean is we get a pullback, some profit taking, gives another bite of the cherry for people who haven't got in, and then consolidates, moves up, and forms a big base, and that is the end of the basing period, and we're into a sort of consistent long-term trend. I mean, we could be in that phase anyway. It could just keep going up, which would be great, but often markets need a pullback, and the potential for a pullback here is one that would be valid at this point. So if that pullback is minor, that will tell us something about the interest here. And but it looks like structurally this is forming a quite a nice base, quite a big base, and a much more solid base than this short-term one. The bigger the base, the bigger the rally. So if this does come back down, yes, it might be disappointing from a short-term point of view, but in the context of the big picture, I think it would be more important that it creates this bigger base, because that will project the rally much higher. So for me, it's a buy, but just be cautious in the short term that we might see a correction. And it looks ever more interesting.
Yeah, I'm excited about this one. It was nice to see things take off. They got a little bit too cheap, which is exciting to me. And some of my friends really use that time to accumulate. One of my friends, shout out to Jordan Reese, accumulate over 200 million OMI. So imagine if this goes to 10 cents. And it might. Will it go that high? Possibly. I can't say for sure that it will. But he used this time to really, really stock up during the really cheap price time, and did really well. And my other friend, Randy Chavez, another OMI whale, stocked up, I think he's over 150 million OMI at this point. And there are other bigger whales that use that time to accumulate. And so now we're actually starting to see the first of the use cases come to fruition, which is what the fundamental analysis on this told me, which is why I got so excited that things got so cheap and couldn't sleep at night, because how cheap they were and how excited I was about the cheap prices, when I knew fundamentally there were good things coming. And so that's why my research style works, right? Is the research behind it that gives me some indication of when I feel things are too cheap, and then I load up on them. So OMI, yeah, I love what's happening. Probably pull back. Yeah, I hadn't picked up that this is probably an inverse head and shoulders pattern, which would take it back to just above the 0.08 price, likely, for that other shoulder. And that's if it plays out traditionally. And then it will base there for a while, and then it might be ready for a bigger run. So at the current price, then what is your call?
Well, I'm broadly speaking, it's a buy, but I just said wait for a potential pullback.
A little bit cheaper.
Be aware of a potential pullback. But from this base, it's in a buy zone. You see what I mean? It's moved from wait to a buy. So I like to think of things in terms of the long term. So if you buy it and then just sort of think about the next 3 or 6 months, that's how I'm looking at it.
Yeah, exactly. For the longer period, like I think people will look back at this price and they will see that it was massively discounted, even at today's price. Now, what's hard is we just saw it at like 30 or 40% cheaper than this price. So it's hard to see today's price and be like, oh, yeah, that's cheap. And I think it'll get a little bit cheaper from here. I'd say the chances are good that it gets a little bit cheaper from here again. And that someday people will look back and see even today's price as very, very, very cheap. And oh my gosh, I wish I could buy it so cheap. And that's what frequently happens. All right, let's jump over. For me, it's still a buy. Yeah, I bought even some more at the 0.8 something price. I loaded up a bunch around 0.07 and below. Wish I had a lot more free funds to load up even more, but there weren't things that I was willing to sell to stock up even more during that really, really cheap price. But I've loaded up in the tens of millions, and I'm pretty excited about where OMI can go. All right, let's jump over to the next one, which is KNC or Kyber Network.
Yeah, so Kyber Network, I've got a chart from the CoinMarketCap, and again, this is one that's I'm not sure it's not up to date really. So let's just double check that I've got the correct market, because I was having a look at this just before we came online. So KNC from CoinTrader Pro isn't updated, and I had a quick look at the CoinMarketCap, and it did say something about there being a new coin. So I don't know whether things have changed, but let's see what I mean. If I put that in, we've got Kyber Network Crystal V2 and Kyber Network Crystal Legacy. So I clicked on the V2, but okay, that looks like for some reason it's now updated where it hadn't before. Okay, that's a bit strange, but at least we got the right chart. So up-to-date data. Again, that is strange because that's not up to date. What chart have you got? Can I just double check?
So this is what I'm looking at, and this goes up. This is CoinMarketCap, and it goes up to
See, the weird thing is on a 7-day chart, it gives me the up-to-date chart. But if I put all, suddenly it doesn't give me everything. That's really strange. That's what's confused me.
It's given me everything on all. That is strange.
So if I put the 7-day chart there, it's showing at 0.052 as the current chart, which is where it is now, but it's not. There's something not quite right with their system or someone's system, because that's sort of ending on the 21st of August. But okay, let's no matter. We know it's around 0.52, which overall is still again, this is one where it's flirting with lows. So you'd have to be pretty confident in the outlook to be sort of buying it here. Again, for me, given that this has been a downward trend, this is enough of a consolidation to warrant giving it some attention, some potential, putting in some buy points. But I personally would need it to break the top end of that to then start a new trend towards sort of $2.50 and beyond. So for me, it's definitely a wait. But where I get interested in it being a buy would be in the 0.88, 0.90 area that would confirm that it's formed a longer term base, unless some other pattern comes in between. But for the moment, it's just a little too close to prior support for me to risk jumping in.
Yeah, so for you, it's a wait, and I like where this is at, and I'll share why. So this was a viewer suggestion. first of all, the market cap is 90 million. That's a little bit higher than most of the stuff that I'm in. Most of the stuff, a lot of the stuff I'm in is in the risky stuff. So $10 million market cap or less. Some of it even under 100 or under $1 million market cap. And those are risky plays. The percent chance of failure when you get into that small of a market cap goes up considerably. And that doesn't mean something with a higher market cap like this can't fail. Though I'd be shocked if Kyber failed. 90 million is their current market cap. You see most of their tokens really are in circulation. So, I guess the circulating supply is here, 170 million. So 67% of the tokens are in circulation. Why I like it is it's down from its previous highs in April 2022. It's down over 90%. It's flirting with previous lows, not quite as low as these. It's also a big statement that they're on Coinbase exchange. Now, for those unfamiliar with Kyber network, what I like about CoinMarketCap is often they will allow the team to have a good write-up of what it is that their team does. So if you're trying to research something, it's not a bad place to start, is jump in and see what they essentially say about themselves. Kyber network is a multi-chain hub of liquidity protocols that aggregates liquidity from various sources to provide secure and instant transactions on any decentralized application. The main goal of Kyber is to enable DeFi dApps, DEXs, and other users easy access to deep liquidity pools that provide the best rates. So this use case, I think, is extremely relevant for the future. DeFi has been massively out of the narrative since really 2021. And at some point, it will come back in. And when it does, Kyber is probably going to do really well. And probably the person who suggested we look at this is probably deeply aware of that. I don't currently hold any Kyber. I'm not opposed to having it. I like it, actually. It hadn't been on my mind for quite a while, so I'm glad a viewer suggested it. If I had more available liquidity, which I've loaded up over the last year especially, so I don't have a lot of available liquidity until I sell something, and I only sell something when it's up enough that it makes sense. So I won't be buying it. If I had some liquidity available, I'd be buying a lot of the stuff I already had lots of, but I would be open to adding in Kyber network. I like where the price is at, and I like the potential future of this. So yeah, good call. I would definitely rate it a buy with the way I look at things. All right, let's take a look over at Stader. And it was our same viewer that suggested we look at Stader that suggested Kyber.
From a technical point of view, the Stader chart, I guess, is in a slightly better position. I mean, it's still correcting like Kyber, but at least it has got quite a big, there's a much bigger cushion between where it is and the lows that it traded last year. And arguably, it's probably trading a bit more correlated to the majors, given that it seems to have turned around at a very similar time, and with everything consolidating, it's doing the same. So I would sort of hazard a guess, but I'd like to see some evidence of it that it will start to move higher with the broader market. In terms of where it is on its own, just focusing on this and nothing else, it's at a very interesting point, because this 0.65 area was the breakout point for this bull phase. Very nice double bottom pattern, 1, 2, and then clean break. It ran out of puff, as has the rest of the market. So it's not like this hasn't gone up and everything else has. Everything's consolidated, so it's followed that, which is, for me, fair enough. And it's come back to that breakout point. So I like those points as buy points, because what was resistance here, when it gets broken, becomes support, and it's right there. Now, it's had a little bounce from there, but that's not really enough to confirm it. So we're at kind of a very interesting point for this particular chart. So I would rate it here a buy, given that it's such an important support point. Now, I'd also say that if it breaks below, then I wouldn't want to hold it. Now, I'd give it some leeway, but I wouldn't want to be holding this all the way back down to new lows. And that for me is how I work things out technically. If I was to wait, I would at the very least need this resistance line to break. So, legging into it, you could start with a small position and then say, well, if this breaks, then we put more of the position on because it's confirming the trend. Yeah, it's an interesting one. As I say, I like this support point. Whether it'll hold or not is unclear, but you only find out afterwards. You can't trade in the past. You've got to trade as the market is at the moment. So I think it's strong enough to warrant some form of buy here, which is my view. But I would also like to see it react strongly to the upside from there to confirm that view. And any sort of hanging around or muted response would worry me a bit, and I wouldn't, it wouldn't be a strong buy. It would just be a kind of a weak buy or a small buy just to test the water a little bit and then wait for some more confirmation. But levels like that are worth watching for sure, which could be why you're asking about it here. But yeah, certainly it's in a better position, and let's see how it trades. But thanks for suggesting it.
I found your analysis extremely insightful, Paul, because I don't know what to do when the chart looks like that on something I don't have any fundamental knowledge on. I don't know that I've even heard of Stader before, which doesn't mean it's a bad project. There are so many projects out there. There's even so many good projects. I'm not even aware of all of them. And trying to keep your mind on such a big space is impossible. One of the reasons I created the closed group that we have, there's a Telegram group that everyone can join for free, but we have a Discord that you have to join the Patreon to get access to, was I realized last bear market, going into the bull market, I was having the same trouble that I couldn't keep track of all the good projects even out there. And even the projects I was watching, I couldn't keep my mind on all of them at the same time. And so I was just missing opportunities. And so I thought, well, shoot, how do you get a group together of committed people that understand where things are going? Because 4 people looking at things is better than 1, but 20 people looking at things is better than 1, and 30 or 40 people looking at things is way better than 1. And there will be fewer missed opportunities because you have multiple people looking at things. And so this might be another one of those good opportunities. I do like where the market cap is at. The market cap's all the way down at 18 million. The fully diluted market cap is 98 million. So that means 18% is in circulation. There's probably some token investing going on, though fundamentally I don't know anything about Stader. Stader, what CoinMarketCap says, Stader is building key staking middleware infra, I think that's short for infrastructure, for multiple POS, proof of stake networks for retail crypto users, exchanges, and custodians. Stader is building extremely modular smart contracts so third parties can leverage our components and build custom solutions. In the short term, Stader is building native contracts across multiple chains, including Terra, Solana, Ethereum, Near, Avalanche, Phantom, etc., and building an economic ecosystem to grow and develop solutions like yield redirection style farming with rewards. So again, this is another DeFi protocol. I'm not sure what caused this pump. Probably some kind of good news. They have a lot of tokens vesting, so it drove the price all the way down to 26 cents. It then popped up to $1.50, and it's been correcting here, and it's hitting this key support. Whether it break through it or not, I'm actually stop buying old coins, man. Old coins have made me a F ton of money, so I don't just buy new coins. In fact, I'm more cautious on the new coins than something that's a year or 2 or 3 or 4 years old. I know some people have a different take on that. I'm really, really happy with my results in the crypto space so far. So yeah, it's just I I buy things that make sense to me. Now, am I going to buy Stader? I don't know enough about it fundamentally. And here's my concern is like, well, what is their token use case or their token utility? SD tokens will have four major utilities. Governance, when users stake SD tokens, they'll receive, which is an auto-compounding token. Interesting. So it looks like if it auto-compounds, there might be some rewards just for holding it and staking it, which is an interesting use case. Smart. Preferential delegation and slashing insurance. Validators stake XSD tokens to receive preferential delegation to provide slashing insurance. Interesting. Good use cases, actually. Whoever this team is behind it, I think they set this up in a pretty smart way for their token use case. Liquidity providers for SD, XSD pairs with stables native tokens will receive SD token rewards and pool fees. So this is some of how their tokens continue to vest. Stader infrastructure. Third-party protocols will stake XSD tokens to leverage Stader contracts and infrastructure. Smart. It'll often tell us who the team is, but I don't see that on here. So at this point, I would rather wait and see where the price goes because I don't know as much about this fundamentally. So if it takes off, fantastic. And if it doesn't, that's okay too. If I knew more about it fundamentally, I might know that, man, this is an amazing price and don't pass it up. What I'd love to happen is it to come back down near these prior lows and to get cheaper. So I'll have to keep an eye on this one. I'm pretty unfamiliar with it, but their setup seems pretty smart. But I also have no idea who the team behind this is. And I really like to understand that because leadership does make a big difference in project success, because what they're doing here is they're building key staking middleware infrastructure. So how good are these people has everything to do with how successful this could be, right? Especially with what they're building. They're building key staking middleware infrastructure. Well, who do they know? Who are they providing this stuff for? What kind of connections do they have? What ability to close those relationships do they have? And if I don't know anything about the team, I can't know what that's all about. Okay, Marcus Diamond, new coins can go into price discovery. That's why we're in the Ponzi space to begin with. I am not in the Ponzi space. I'm in the early technological, like early stage VC investing in a technology space that is going to go massively ballistic over the coming 10 years. Now, there is a lot of Ponzi stuff, and some people bet on that. Like meme coins are in the Ponzi. A lot of times their tokenomics to me seems like Ponzi tokenomics. And that is more in the gambling side of things, though people that really get a feel for the meme coin space and understand it well, some of them do well. But I'd say the percentage of people who invest in meme coins get wrecked. Some of this other stuff, I've heard where you're coming from, Marcus. That's why we're in the Ponzi space to begin with. Yeah, so for me, I like to find good businesses with solid business idea that will stick around. So when Cardano, I made a fortune on Cardano last bear market. It was nowhere new, but it was massively undervalued in my opinion. And there were fundamental reasons why I said that. And it wasn't a new coin. And yet it went over 100x from where I was loading up at. So that's the approach I take, which is the type of approach that I share. And it's not for everyone, and it's not meant to be for everyone. It's meant for people that have a framework to look at things and analyze things so that when they learn to make good decisions on this over a 4-year period of time, they can win massively. And so that's the approach I take to this. And I'm not new to investing. I had 20 years investing experience using this type of analysis in real estate. And so I just brought that forward to crypto. And I like this style. It's amazing for me and it works amazing. In fact, most of the people I know that got rich in crypto, this is exactly what they did. Whether they realized it or not, this is inherently what they did. And so that's what I share. That sharing that type of thing doesn't lead to a really big YouTube channel because I'm talking about things when prices are boring. And so I don't get a lot of hits on my videos. Why? Because people aren't searching for these tokens when the price is boring. They're searching for them when they're massively overvalued and the price is going massively up. And for me, that's an exit point or a sell point. And so that's okay. That this channel will never be one of the biggest channels out there, because in order to be the biggest channel out there, I'd have to cover everything when the price is near tops rather than when they were at bottoms. And that's fundamentally inverse to what I want to be doing with this channel.
Yeah, absolutely. When it gets overdone, I think you and me both will be agreeing that, yeah, things will get risky and it'll be time to sell, and it won't sound like it'll make sense, but it will.
A lot of people will call us crazy at that point, and we're like, I'm taking profits here. I'm taking profits here. And they're like, what are you selling for? You're so crazy. In fact, when I had sold my Axie Infinity land, and I met this guy at the Bitcoin conference, and he was just starting to buy then. I had already sold all my land. Now, he didn't end up buying at the top. He ended up buying half of the top. So he was paying 40 to 55,000 for mystic plots in the Axie metaverse, essentially, or the Axie game. And they topped out at 70 to 120,000, depending on if it touched a road or where the location was. So he's buying half of the top, and he was borrowing $1 million, $2 million from other people too. I know. And, and it's massively down from where he was buying at. And he thought what I was doing was, I had sold out. I was crazy. I needed to get back in. It's what he was telling me. And I was like, yeah, no, like I'm good. Like, yes, should I have waited to sell till now? Yes, I didn't know it'd go this high, but that's what happens when you take profits. You don't always know where the top is. But thank goodness I wasn't buying at that point, right? Because, yeah, massively reversed from where he was buying at. All right. That's all on our pre-list of what we had. We've got one of our suggestions from those in the chat, and the chat has been super quiet today. Is everyone kind of feeling sentiment is down? I do find that how people are feeling in the market can often influence how much engagement we have in the chat. So I'm thinking maybe people are feeling down,
or maybe it's holiday times.
Yeah.
Well,
what was the suggestion we had in the chat? And I said, we'll take a look at it later. Okay. Thoughts on Dimitra. All right. Look that up real quick.
What was that? What was the code? DM? I know it's Dimitra.
Back up so you can see it.
DMTR, was it? DMTR. Let's have a look. Dimitra. Okay. Right. That's quite an interesting chart, actually. Very interesting. I mean, look at. Do you want to flick the screen over? Yeah. So yeah, look at this. Wow, that is possibly the straightest downward trend I've seen in a long time. Like the clearest sort of night and day downward trend, upward trend. So very interesting. Don't know what it does, but there's a fairly decent amount of history here, and it seems to be when it gets on a path, it stays on that path. The base down here, very, very little evidence of a base other than the trend line breaking. And then the dynamics of this chart changed aggressively, very, very quickly. So where we are here is we're correcting this first phase of the bull market. So we've seen this bear market that it's now moving against. So it's recovering. But phase one is over. This phase two correction is still underway. But I think given that it's so far above its prior low, it warrants some interest and potential, looking for potential buy points. Now, where those would be potentially the top of these breakout points, these little consolidations. They're what I call flag or pennant formations. They're very short term. In the coming bull market, we're going to see a lot of markets doing this, but it only tends to happen in very short term when the market is running very aggressively. When the broader market's running, you tend to see it in more and more places. So as interesting sort of recovery points or points where the market will react, I think it's worth looking out for a touch of these levels and then a reversal. In the very short term, there's nothing here to say right now I need to jump back in, other than the fact that it's correcting this first move. So we've got move up, wave one, if you like, in Elliott wave terms. Wave two correction, at some point this is going to turn around and move into a potential wave three. So I think it's interesting. Whether I'd buy it right here, right now, I'm not sure. I think I'd rather wait a little bit, certainly for this trend line to break, or a touch of support down here with a stop loss below, just in case I've got it wrong. But it's a wait, but it's a wait with interest, if you see what I mean, rather than a wait because I don't like it. I do like it. I think it is interesting. I think it's a good one to be watching. It's a dynamic market, but it's just not quite ready for me to step into it as yet on this chart. But I'd love to know a bit more about it. So, thanks for suggesting it.
Yeah, thank you for bringing this one up. And Justin, you have some good questions in there. I definitely want to get to those because maybe I didn't complete that thought very well. And maybe you're not the only one with those questions. Dimitra, I've never heard of it before. Its chart follows, actually, this is very similar chart to the other one that we were looking at, right? What was that? Stader was like this. And so it bottomed out, it then popped up. And so it's a relatively new coin, right? Well, I guess end of 2021 it came out. So not so new. Let's see what it does. Dimitra is a blockchain platform that is democratizing the agricultural technology space for smallholder farmers globally. Dimitra provides access to the blockchain, machine learning, Internet of Things sensors, and satellite technology through a mobile platform that helps farmers globally increase their yield, reduce costs, and mitigate risk. Current farming practices are not sustainable, creating an evolution of practices that will contribute to solving some of today's largest issues for farmers, issues like poverty, hunger, global warming, carbon emissions. Well, Dimitra, I'm sorry, you've totally lost me with this statement here. Projects that start talking about, well, first of all, they started to lose me here. Why are current farming practices not sustainable? Like, they are. In fact, new technology will come forward and do it. So when I see projects get into the political space, like, yeah, we're going to solve poverty, hunger, global warming, carbon emissions, fresh water. And it's like, you better have a really, really good reason of how you're really solving those things, because those are buzzwords. And most of the time when I've seen projects using those buzzwords, there hasn't been enough substance to them. So they're trying to use buzzwords to get excitement. Maybe I'm wrong on this. It's kind of like when I was dating years ago, I would generally kind of joke about a girl being crazy, right? So I was just like dating and having fun dating, and I'd be like, haha, you're crazy. And if they're like, get all weird, then I'm like, probably she is crazy. If they just kind of laughed about it and they're like, yeah, I can be crazy, no big deal. So it was just a quick and dirty red flag that just like, it wasn't 100% foolproof. And the same thing that I'm telling you isn't 100% foolproof, but most of the projects I've seen bring up stuff like this, there isn't much substance behind them. So they're throwing in these buzzwords to sound like, but generally those projects have underperformed in the market versus others. So I can't say I'm interested in this one at all. Now, maybe there's reasons, like the farming industry, maybe there's reasons I'm not aware of why farming isn't sustainable. I don't know. Population size tends to correct. Technology tends to increase the yields that farmers can make, and technology continues to develop. Like, throughout time, we've seen people say, oh my gosh, the population can't get any bigger than this. And then new farming mechanisms are invented, and all of a sudden you can sustain a bigger population. Global warming and carbon emissions. I thought it was climate change, because global warming and global cooling, we go through these periods. And so they stopped saying global warming or global cooling, and they just started saying climate change. Why? Because the climate always changes. And that way they don't have to reverse, oh, we were warming and now we're cooling. They can just say climate change and we should all be scared. So that's my feelings on it. When I see these political buzzwords, I'm like, total turn off. I'm just like, nah, nah, there's other ones I like better. Maybe they have some substance to it that I'm not getting. Not interesting. Let me get to Justin's greater point. I appreciate the questions you're asking. I'm genuinely wondering why you're suggesting to listen to people in the Discord on what to buy instead of doing independent research. So clearly I didn't complete my thought very well. Jay, I'm curious why you're saying to listen to people on what to buy when earlier you said think on your own, learn how to be an independent investor. So I always listen to what people say they're buying and why they're buying it. That doesn't mean I just buy what they buy. In fact, that isn't the case. I then take the research and reasons that they've given me, and then I do my own analysis and I see if their reasoning holds. And if so, they've greatly informed me, right? Because I can't keep my mind on and eyes on everything. So when somebody says, oh my gosh, this chart is popping off, take a look at this, this doesn't mean I just buy it. It means I then, oh my gosh, yes, let me look at this. Let me look at some deeper things behind it. Oh yeah, I like this too. Thank you for that. And so clearly I didn't complete my thought well. Fantastic questions. I rarely buy a project without knowing the project unless it's strictly on a fundamental chart thing where I'm looking at the chart. Somebody makes me aware of it. I see a breakout point and I'm like, oh my gosh. And short, I'm going to buy it. But that's a fundamental analysis. And the reason why Paul's analysis is so amazing, and I love to have him on, because that's pretty much everything he buys is strictly on the chart. He keeps the fundamental analysis out of it mostly, so he doesn't get biased by it, so he can make strictly price-based analysis decisions. And there's a methodology to it. It usually leads you to buying at different points than where I usually buy based on my fundamental analysis. But there's massive value in understanding his side of things too, because sometimes in the price charts, you see these things where the odds are stacked for you rather than against you if you take this kind of bet. And learning to think how he does and learning when you're wrong so that you can parachute out of it, there's massive value to that, because sometimes I make those decisions too, even when I don't know the fundamentals. But most everything I buy is based on fundamentals. Abe jumping in here. What's up, Paul and Jay? Appreciate the alpha as always. Great analysis. Are you still bullish on Solend? Well, Solend got wrecked because they trusted this guy out of the Bahamas named Sam Bankman-Fried and his company, what was it? Alameda Capital, who provided liquidity and seemed to have sold them down the river massively. Now, I hope Solend survives it. I couldn't understand what was happening recently after launch when their price was tanking, and they couldn't understand it either. But having heard from some companies that used Alameda Research to provide their liquidity, Alameda Research essentially was savaging their price on purpose because of the structures that Alameda had set up where they made massive amounts of money. And this only came to light because one of the companies refused to take their buy off and sign a non-disclosure where they would then not tell anybody what Alameda Research was doing, and they would wreck companies. And then they would say, I know we just cost you $20 million, but you're about to go out of business and everything. If you sign this NDA, they would start at like 500,000, then they would ask for $1 million and $2 million, because Alameda Research would make 10 or 20 million in the process doing this while savaging the company and essentially extracting all the value in their token for themselves, and then offer them a pittance to sign an NDA after they had broken them. At least this is according to what this guy had said. And it seemed like Solend, that's probably what happened to them. I hope they survive. I don't know. I have a bunch of tokens in Solend. I'm not accumulating more. I'm just holding on to what I have. I didn't realize that that was even a risk. At the time, I knew some people super heavy in DeFi, and they thought Sam Bankman-Fried was like a god to them. And I was like, okay, well, I wouldn't have even suspected the amount of bad things they were doing behind the scenes, and nobody was calling them out on it for so long. But things do come to the light. So yeah, totally wrecked my positions in Solend, and I'm not excited about that. But there are sharks in these waters. And so that's one of the reasons I use diversification, because that position may never come back. And I probably have $10,000 in that position. That's not exciting to me. But and it may, often they do, if they do stick around, I might get my $10,000 back. I might even make a big profit on it. Wrong part of the market to know whether that will end up being profitable yet. But it is surprising. Like, for example, I was talking to some friends that had been around since 2017, and this is back in 2021, and they were checking through their old wallets, and they go, oh my gosh, this is crazy. I've got $527,000 of this token in this wallet, and I forgot about that project, and I thought it was dead during the bear market. Oh my goodness. And I'm like, wow, that's a big day. 527,000. Are you kidding me? So do note that sometimes these things come back to life, even when you think they're dead. So I never get rid of those tokens at the cheap price. All right. So Paul's looking up the website for Dimitra.
Yeah, I was just curious because I just wanted to look a bit more at it, because it's an interesting area where farmers will be using AI to look at their crops, to look at when they should be watering them and all that sort of stuff. There's plenty of stuff you can do with AI, whether it's connected or whether it's something that Dimitra has a use case for, I don't know. So I wouldn't mind. I'm going to be looking at this video just to see, just out of curiosity. But I agree with what you were saying, is that there are a few buzzwords that were chucked in there. It's either a warning, or they just haven't marketed themselves particularly well. So I'm not sure what the case is. But
when I see that in the crypto space, and earlier I thought, so that just comes from lessons learned. That just came from experience, because I know some projects and they're like, oh, they have connections to the government of France, and they were using all these politically correct buzzwords, right? And I was like, we'll see how this goes. And so over time, when I saw most of the projects that threw out those buzzwords, they ended up being maybe a scam, maybe not a scam, and just were overstating and overrepresenting themselves, but they sure as hell didn't turn into a profitable business idea. And their tokens never lasted all that long at all. In fact, most of them didn't last from one bull market into the next even. And so just when I hear those things, it's just kind of like red flag based on experience that just totally turns me off. And so it's like, like, would I look at Dimitra deeper? Not unless I had a really good friend with a good track record that like called me up and said, hey, yes, heard your analysis on this, but this is what I love about it, and this is why I think. And that'd be like, oh, okay. If they provide me good information behind it. Sometimes when you are connected to certain governments, you have to use those buzzwords, because the government won't deal with you unless you do. It just is what it is. Political correctness never goes away. It just changes what's politically correct all the time. And it's been that way probably since the dawn of time. That's why you couldn't tell the emperor he had no clothes on when he was convinced he had these invisible clothes, because political correctness is real. However, political correctness is almost always bad business. So yes, if you get in ahead of political correctness because you have political insiders, this is how politicians make a lot of money, because they know that they're going to use their political correctness to push a certain industry, and then they invest in that industry. Then it gets pushed, the price pumps, then they dump. Yes. Do I love them doing that? No. That's corruption in my opinion, but that happens all the time. So I don't like to invest in politically correct stuff, because I like to invest based on good business and meritocracies rather than, what do you call it, where it's just like insider corruption. Yeah, that's not a meritocracy. Meritocracy is based on an idea that will change and improve people's lives.
Crony capitalism, is that what you were thinking of? Yeah,
which is another term for it, but the most commonly used and most commonly known term, crony capitalism, which crony capitalism is just actually fascism. Fascism is like a free market, but the government dictates who the winners and losers are. So really, what's the difference between crony capitalism and fascism? I don't know, because, Germany, the politicians decided which industries were going to get the contracts and which weren't when it went fascist, right? Before that, it was regular capitalism, and regular capitalism works until it gets turned into crony capitalism or fascism, where the government determines who all the winning businesses are or not, based on political reasons, not based on performance reasons. Cool. Moadib said, love Paul's insights. Thanks, Paul. And he's got the old school, like 1980s Moadib picture there. Yeah, I'm a big fan of Dune, so great reference there. All right.
Pleasure. Thank you.
Supra Miska says, Bitcoin is gold, ETH is a bank, ICP is everything else. Cool. I'm not investing in ICP, but Bitcoin is gold, ETH is a bank. I like your analysis, actually, your short and concise analysis there. I think you're right on those first two. ICP will, we will see. I mean, it's definitely way, way cheaper. I remember when it launched and everyone was talking about it, and the market cap was like tens of billions of dollars. And I was like, oh, I'm getting into ICP. Are you? I'm like, hell no. No, I'm going to wait till maybe when it's boring, I'll buy it. Maybe if it gets cheap enough. But it is in the blue chip category. Maybe it changes the world and does well from here. Most of the stuff I'm in is a lot cheaper. But the first two I 100% agree with. And maybe you're right on the third too. Cool. Any other thoughts, Paul, before we wrap up?
No, I think we've covered everything. Yeah. So, yeah.
Paul, you're amazing. Thank you for joining us. We deeply value your insights.
It's always a pleasure. Thank you, guys. Thanks so much. See you next week.
Hey, I love some of your thoughts. Justin, appreciate your questions. Don't mind questions like that at all. Look, there are inverse. One of the things I realized through having a YouTube channel since 2020 is that there's these weird pressures, right? So a couple pressures. Let me share with them. Number one is, how do you make money having a YouTube channel? Well, you don't make money having a YouTube channel until you have hundreds of thousands of subscribers to it, and you're getting 10 to 25,000 views per video. Then you start making money from YouTube. Another way you can make money is taking all kinds of sponsored deals and sponsorships, and especially undisclosed sponsored videos. And from what I've seen, most people have cut out undisclosed sponsored videos, and rightly so. You can't be doing undisclosed sponsored videos. Sponsored videos are fine. That's how a lot of people make their money. The reason why I tell almost all projects no, and I haven't taken a sponsored video in a long time. I have strategic partnerships with Launchain and Bumper, which are projects I believe in enough that I've held them for a long time. And it was only through the relationship created over time that those strategic partnerships came about. Was, here's my deal with you guys. I only take any kind of sponsor or strategic relationship where two things. Number one, I like the project enough that I would buy it myself, or I think it's at a really interesting buy price. And secondly, that I like the project enough for the long term, right? Because I'm trying to create something different, even though the incentive for having a YouTube channel or some kind of influencer completely misaligned. I make my own money through investing. So I don't need the revenues from YouTube to survive. And so that puts me in a good position in that I don't have to care about the money that I get offered. And I've been offered $10 or $20 or $50,000 to cover stuff that there's no way I would cover those, because it would be shitting all over you guys. And that would be horrible. So it would also savage my credibility. And with what I'm trying to create, which is the most informed audience, which I think will lead to the wealthiest audience, how do those things coincide? Well, they don't. And so that's why I'm really, really, really picky on who I can even say yes to either a sponsored video or a strategic relationship. And that's okay. And YouTube video, like the number of views and stuff like it will never be the biggest channel. And it's not meant to be, because if you become the biggest channel, then our power is so great that when we talk about something, it pumps on our own audience. And so it'll seem like, man, I'm always right. I talk about something and over the next 4 days, it goes up 30 or 40 or 50%, even during a bear market. But that's just because of the channel reach. In order to get that big, I would have to talk about things when they're hot and their prices are way up and get people all excited about them. And I'm sure you can understand why I can't do that with what my goals for the channel are. And even if that means that I'll never be the biggest YouTube channel, well, great. That's the cost of my bigger goal, which is to create the highest, I guess, the channel with the wealthiest audience, which is what my hope is. But I also can't tell you what to buy because I'm not a financial advisor and I refuse to give financial advice. It's not about telling you what to buy. It's about telling you what I like and why I like it, but then expect you to do your own analysis and decide for yourself. Don't ever buy things just because I like it and where it's at. That's for you to then take the ball, do your own research, and make your own informed decision. Because here's what's cool about that, is then you're going to make an informed decision. And if you pass it up and then it goes way, way up, you learned an amazing lesson from that. If you buy it and it goes way, way up, but you had done your own research, you probably learned an amazing lesson from that. If you just bought it because I told you to, number one, that would be financial advice and wrong of me to do. Secondly, what would you have learned from that? What would you have gained? Would you have become a better investor? Not really, right? So wouldn't that be defeating the whole goal of this channel? So that's why I approach things the way I do. I love you guys, like way more than you know. I love the community and what we've created. I love the private Discord and the interaction there. I love the Telegram chat. It's a bear market. These things do die down. I do love that a lot of you guys have stuck around. And I hope you can see the bigger vision, because I do know this time last bear market, I didn't have the YouTube channel. It was hard to connect with people that thought the right way. At least I found it hard to connect with people that thought the right way, though I found a few of them and they were massively stocking up like I was and dollar cost averaging at lows, though they weren't the bottom. And they all became multimillionaires too. And I was like, as I started the YouTube channel, and really started creating content, I wanted to teach what I knew worked, even though nobody was covering thinking like that, because I knew that system worked. And so we're going to do an experiment. Am I able to teach this in an effective way that the audience learns to think the right way about investing so that they have the kind of gains that I had made, that other people I knew that thought that way made? Can I teach that effectively? I don't know. I think I can, but we'll see. And so far, I'm seeing the experiment be very, very successful. The experiment isn't on the principles that I teach. Those work. The experiment is whether I can convey them through YouTube in a format that gets enough traction that people can benefit from it. Because one of the problems with delivering substance over sexiness is that people follow sexiness, right? So if I had a Lamborghini on the show, or and I did all these sexy things and I spent my money like a bad investor instead of investing in crypto, but I did all these things that showed sexiness, we would get way, way more views and way more credibility because it's sexy, it's fun, it's easier to follow. So can we provide a tiny bit of sexiness, but a whole lot of substance so people learn and grow on how they think, so they can learn to think to be better investors, and will enough people tune into that to then be able to change their financial lives? Because then the next go around, which I probably won't be making YouTube videos about crypto in 4 years, but it would be even easier next time, because then there will be a whole slew of people who stuck around during this bear market that became multimillionaires, and they would just talk to them in the chat, right? You would see that in the chat. Well, I started following Jay in 2021. I'm now worth $7 million, blah, blah, blah. Yeah. And people would be like, holy freaking smokes. And they would stick around. So it's these earlier days with the YouTube channel that are harder, right? If I had started the YouTube channel back in 2019, 2020, and built up an audience by 2020 and started really sharing these principles, yeah, there would be a lot more testimonials in there. I have testimonials from friends essentially that were investing, but I didn't have a YouTube channel back then. And I was still trying to figure out how what I knew about investing correlated to the crypto space. And I definitely didn't feel like I was solid enough in that to really start talking about those principles. I had to know what I knew worked. And it did. And I started my channel late 2020 as things really started to pick up, because by then I knew that they worked and I was sure what we were going into. And I was like, oh my gosh, this is going to be massive. And so I felt like I had something to add to people. I also felt like there was a shortage of YouTube channels that shared things this way. In fact, when I say shortage, I mean like almost nobody did. And so I felt like, there are people that were also looking for that kind of channel like I had been and not finding it. And maybe we could find some people interested in the channel. Okay. Chris, appreciate it. Just wanted to catch some of these that I missed. It just made me think I get it. Okay, cool. What's most frustrating to me is how meme tokens get so much money, but solid projects like Bump and Omi are underdogs still. Yeah, just wait. That does happen because meme coins have all the sexiness, but very little substance, right? But sexiness sells in the short term. Substance sells in the long term. Doge was doing amazing when Cardano was really cheap. And yet Cardano just did awesome. And Dogecoin wouldn't have done so well if one of the smartest financial people in Earth's history, Elon Musk, hadn't played around with the sexiness of it and tweeted about it and stuff. So how can you predict that kind of thing? Thank you, Chris. Really appreciate it. All right. We've gone long already. I'll look at SRK, Sparkpoint. I've looked at this before, but I don't remember it. But I've got 5 minutes more, so why not? Okay. So $1.4 million market cap. I love these low market cap coins. Fully diluted market cap's only 1.7. Ooh, boy, their price has been crushed since this took off last in March of 2021 and has been punished since then. It didn't even pump very much during the later pump of later 2021. It's on KuCoin is the biggest exchange it's on, but it's also on Uniswap. What is Sparkpoint? Is a duly registered corporation in the Philippines under the SEC. The project was launched and is one of the pioneer cryptocurrency startups in the Philippines. The project aims to fast-track mainstream adoption of blockchain and cryptocurrency through an ecosystem of practical products and services. Boy, we just read like multiple sentences here, and we still don't understand anything about what they really do. Sparkpoint started with initial funding of $50,000. With only this minimal capital combined with discipline, determination, and hard work, the team was able to launch various blockchain-based products and services, including Sparkpoint Wallet, Sparkpoint Learn, Spark Play, Spark Earn, Spark DeFi. These products. I'm not seeing what I want to see in a project that I would believe in long term. What do they really do? So they created a wallet, okay, but how does that make anybody money? Okay, Learn. How is the Learn going? How is the Play going? How is the Earn going? And Spark DeFi. Now, DeFi has been out of the narrative, completely coinciding with their price point. So if they're still well integrated in the DeFi ecosystem, when we have a DeFi run again, maybe they'll do well. But I'm not buying because I don't understand enough their value proposition on why I would invest in this over something like, say, Sidus, where I understand what they're doing, where they're going, what their token use case is and stuff. And they had a chance to tell us better what their vision is for the future, and they wasted it. So I think they really need to rewrite this paragraph in Contact CoinMarketCap and update this with a better vision of why they're going to be relevant in 2 years from now, 3 years from now, 4 years from now. All right. Thank you for the stream, Rain. Paul, hoping I can join the Patreon private Discord soon. Sourdy, we'd love to have you. You'll find out there's a lot of great people in there as well that cover some in-depth fundamentals on things that I haven't covered deeply. and you might even like their analysis, and it's solid stuff. So it's great. And yes, there's essentially the cheapest price is $20 a month. For some people that feels like, oh my gosh, that's so much. What that does is, like, probably you've heard this story before, but I used to throw really big parties when I was single 7, 8, 9 years ago, and they were free. And I would invite a whole bunch of people, and the most that showed up at one, we had like 2,000 people show up in a house that was only 3,700 square feet. It was just ridiculous. I couldn't even walk through anything. And it had this huge backyard. Took me 20 minutes to go from one end of the house to the other. The police showed up, asked us to get half the people to leave. It was way crazy, but I didn't charge anything for the parties. But what I found is a lot of people came and they were just whiners and complainers. And it was weird. And I was like, they're coming to a free party. I say, just bring some food to share with other people, but you don't have to bring anything. Just suggest that you do. And it was weird. So later I started charging $20. I would have some people like go buy food and everything. I would front the money for it. And essentially the $20 reimbursed me for the costs I spent. And the party quality got way, way better. Just more serious people came. So essentially, to be invited to the party, I mean, that's really what the $20 a month is. And what it's done is created an environment where everyone there is committed to their own crypto future and learning. And I find the engagement with the family, the Rainmaker family that is involved in the Discord, is way, way, way better. So I love that. Also, it keeps all the scammers and bots out for the most part. I haven't had to kick a single person for being some kind of bot or scammer or pitching scams in there. Yeah, that'll probably happen someday. But, constantly looking at that. In fact, the community in there is really educated, so they would spot it out and call it out immediately should anyone ever try to do that. Cool. Thanks, everyone, for joining us today. Hope you love this wrap. Maybe at some point we'll update the wrap in the next bear market or the next bull market. I would love to contact Charlie, who did this, and at some point record a music video for it. That would be a lot of fun, and probably in this next bull market I'll do it. So hopefully he's still in a place that he's loving music and would love to do a music video for it. It probably only cost me like $3 to $5 grand to do, which would be a lot of fun to add. But for now, we just have these lyrics. I wrote a lot of the ideas and the words behind it. So we modified them so that it'd be a little bit more fun in a rap, and then he recorded it.
Came into the space, chasing all of the gains, chasing the pumps and all of the hype trains. But like in life, shit right before you could. Was told to buy when it was pouring like a rainmaker should. I buy when it's down, don't chase the boats that I miss. Cause I always make the time in mind. I stick the one out cause I'm patient like that, and I'll wait for the right time. I sell when it's high, I buy when it's low. They call me rich, they call me smart. I'm just a rainmaker running the show. Calculated investments, I don't leave with my heart. The principles are simple, they're leaving a mark. Buy when it's boring, just gotta be smart. I sell when it's hype, like all the channels they pump it. That's when I was selling, got parabolic and dump it. They call me rich, they call me smart. I'm a rainmaker, making my own start. I'm with the future, learning the past. Makes the time fly by, years going so fast. The game plan is mine, I'll own it now. When I reach the top, haters asking me how. Cause I'm a rainmaker, investments I love, and I follow what I learn, not relying on luck. The time is never better, the time like the present. This next 5 years is a gift and it's feeling like heaven. I'm committed to learn, studying to know that nothing comes easy, but with knowledge the game show. Sticking out this wrong, cause soon will come a bear market. Learning and growing, and when it's slow will be the target. They say it's come out, Bitcoin is dead. The massive decreases can get to your head. Sticking around, the time is better. Strong like that, I'll let the others be fretters. 2 years time, the ball will bring back the gains. That makes it worth the effort, cause here comes the rain. So let's go rainmakers, let's make it all happen. Let go of the hate, let the haters be cracking. I'm here for another 5 years, let's do this together. The time is right, the time could be better. They call me rich, they call me smart. I'm a rainmaker, making my own start. I'm with the future, learning the past. Amazing time fly by, years going so fast. This game plan is mine, I'll own it now. When I reach the top, haters asking me how. Cause I'm a rainmaker, investments I love. And I'll follow what I learn, not relying on luck. Haters be hating, the time to slow down. Addressing what they say when I'm wearing my crown. They're chasing green candles like someone who was new. I got a vision that was bigger, helping me to push through. I'm still human and sometimes it is rough, and that's what makes me special, simply I stay tough. Cause I'm a rainmaker, investments I love. And I follow what I learn, not relying on luck.